Hello, my name is Kendra Simcox, and I am the CEO here at AlphaMind Technology. Our mission is simple yet bold. We look to enable every user with a powerful device to achieve powerful results. I am here today with the company's co-managers to discuss the results of our decisions for quarter 5. Let's begin with Colin in our marketing department.
Thank you, Kendra. My name is Colin Cassette, and I'm the VP of Marketing. As you will see, this quarter we didn't make any changes to any of our brands. This wasn't because we didn't want to, but it was because our R&D investments wouldn't be paid off until the sixth quarter, so we weren't able to enhance our product in any way. Would have liked to, which is probably why when you look at how our competition did and our market demand, we went down, but we were expecting that, and it was something that we knew we were going to have to bounce back with. So going over with Alpha Pro Plus first, we decided on a selling price of $4,450 with a rebate of $200. Our total cost per unit ended up being $1,974 and a profit of $2,376. So it did drop. Our profit did go down a little bit, but like I said, that was expected. Next, we have the Alpha 3. We decided on a selling price of $2,800 with a $200 rebate. Total cost per unit ended up being $1,595 and a profit of $1,105. Like the Alpha Pro Plus, the profit was slightly lower than last quarter, but also expected. Lastly, with the Alpha Grow, the selling price was $3,250 with a rebate of $150 and a total cost per unit of $1,557. Our profit was $1,618, which, like the other two segments, was slightly less, but also expected. Last we have is the advertising. We did significantly more media placements, which it's hard to say whether it paid off or not because our ads were considered not good enough. We misjudged what being the highest rated brand in each segment meant. So we did put that on our ads, but it was considered wrong. So that is something we're going to have to change and take off and make sure that when we put stuff in our ads that it's 100% accurate. Now I'm going to send it off to Kendra, who's in sales. Thank you.
Thank you, Colin. Along with being the CEO of AlphaMind Technology, I also have the pleasure of being the VP of Sales. Each of our sales channels are steadily increasing when it comes to revenue. In the sales office channel, the revenue per brand increased by an average of 33% over last quarter. In the web sales channel, the revenue per brand increased by an average of 87.9%. So in quarter 5, we had revenues of $4.9 million and $2.9 million in our sales office channels and in our web sales channels, respectively, together totaling $7.8 million in revenue this quarter. Here in the sales department, we did not schedule a new office to be open in quarter 5, but we did schedule a new office to open up in Sao Paulo in quarter 6. We decided to open an office in this location because of the lack of competitors in this region. Although it has the smallest market size for all 3 market segments, there is still great potential to take the market shares in this location and to generate even more revenue. We are very excited to have this office opened in quarter 6, and we have huge plans already set in place as to what we will be selling and how many sales staff we will be hiring. As for hiring new staff in quarter 5, we decided, we have a very, very well-rounded set of salesmen in the sales offices. The only change we made is that we hired one more salesperson to be placed in our Chicago office as a support specialist. The reason for this is because we want to cater to our first priority target market, Mercedes. From our market research, we know that Mercedes highly values fast service and support response time. By adding one more person to specialize in support, we are making sure our target market is well taken care of. And in our web sales channel, we have hired an additional 2 more people in web sales. So now we have 5 web salesmen and 2 web sales support specialists. We are steadily increasing our staff in this channel and in our sales office channels to help raise demand. So along with demand, all of us here at Alphamind Technology knew that we would take a small hit to demand due to the ill will generated from last quarter's stockouts. We had a demand this quarter of 2,797 units before ill will, and after ill will, our demand was only 2,229 units. So overall, that is a slight decrease in demand from last quarter, 21% to be precise. But our moves this quarter are very small compared to what we have planned for quarter 6. In the sales department, along with all the other co-managers, we are beyond excited for our plans to follow through in quarter 6. And with that, let's move on to Daniel to talk about what's happening in the Human Resources Department.
Thank you, Kendra. My name is Daniel Zaharchik. I'm the VP of Human Resources here at Alphamind Technology. This past quarter, we made it a goal to increase the compensation packages for our employees dramatically. And let me just tell you, goal accomplished. In our sales department, we gave everybody in their package a $11,000 boost. So $4,500 in their annual salary. We gave them the best health benefits possible, 2% increase in their pension plan, and they increased their productivity from 80.1% to 82.2%. That's a really good jump. And for our production employees, oh my, we are so proud of them. We gave them $8,000 increase in the whole package, $4,000 in the annual salary. Benefits, health benefits were maxed out, 2% increase in their pension plan. That jumped from 82% to 92.3%. Huge jump. We're well above our competition. We will continue to reward our employees for their hard work. We want them to remain happy. Thank you for that. We love them so much. And next we have Allison in manufacturing.
Thank you, Daniel. We are fortunate to not have had stockouts this quarter. However, this was surprising. After going into a deep dive on demand projections with all of Alphamind's co-managers, we predicted demand would be higher than what our fixed capacity would allow. We were aware of the ill will generated from stockouts in the previous quarter. However, we believed increasing our ad placements by 50% would result in a large increase in demand. This was not the case, and demand actually declined this quarter. This could be for many reasons, but most likely because our competitors have introduced more products to the market and paid off their R&D investments so they could improve the quality of their brands. And we were not 100% there yet. I would like to reiterate, we projected demand to be over our fixed capacity of 3,250 units. In the previous quarter, we generated roughly 2,900 units, and we truly thought demand would spike well above that to at least 3,250 units. Based off this projection, we set our operating capacity equal to fixed capacity. We were aware of the increase in production cost per unit that resulted from this decision. If you look at the tables on the right side of the screen, you will notice a direct correlation between the increase in production cost and the increase in direct labor. We have learned how detrimental stockouts to our bottom line and our reputation, so we thought it would be best to take the hit on the increase in production costs to reduce the impact of generating stockouts, and high stockouts for that matter. A tactical decision we made this quarter was to stop production of all products and send our employees home when demand was met. This would leave us with zero ending inventory across all products. In quarter 6, we will have 2 new attractive features to our customers to build into our products. Knowing these new brands will generate more demand than the old ones was the prime reason to ensure our ending inventories were at zero. We did not want to bear the cost of holding inventory when the products would soon be discreet in the market. If you take a look at the bottom left table, you will see exactly how much we misprojected demand, which resulted in excess capacity of 25%. This was charged to our overhead at a total cost of about $480,000. We invested in our fixed capacity, which will now be able to produce 9,750 units. We may have been unsteady throughout the quarter with our marketing effectiveness and performance, but we are eager to take on quarter 6, especially with the new R&D investments and our overall better knowledge of how the market has responded to our company throughout the year. And now I will pass it over to Feng, our Vice President of Finance.
Thank you, Allison. My name is Feng, and I am Financing and Accounting Manager. The value of the cash inflow in this quarter increased $2 million by the increasing of sales revenues. And the cash flow also increased because of the incurring of new research and development costs and the setup costs for the new sales office in Sao Paulo and the expanding of fixed production capacity. So at the end of this quarter, we have a cash balance in hand is $3.5 million. Let's move on to the income statement. Our sales revenues increased $2 million and our gross profit increased $1 million. However, our expenses also increased, especially in research and development costs. We decided to pay double costs in new R&D. And the excess capacity cost us $500,000. And this cost can be eliminated in the next quarter because we decided to pay $2 million to expand our fixed production capacity. So at the end of this quarter, we temporarily have an operating loss about $700,000, and our earnings per share is decreased. Let's move on to the balance sheet. Our current assets is cash only, and our fixed assets increased $2 million by expanding our factories. There is no new common stock issuing in this quarter, so there is no change in total common stock. And at the end of this quarter, in total, we have $6.6 million in total equity. And next, Daniel will take some SWOT analysis for Alphamine Technology.
Thank you, Fung. So here we have our strengths, weaknesses, opportunities, and threats. So a few strengths of ours is that this past quarter in our manufacturing department, the goal is to never have stockouts and to never have unwanted inventory. And this past quarter, we did both. So we did very well in our manufacturing department. Also, we did increase our fixed capacity so that we can produce more units a day, so that when our demand does increase, we have the capacity to match that demand and produce enough units. Also, investing into research and development to get better components for our new brands. Those investments are always nice so we can better our brands for our customers and put the best thing out on the market. A few weaknesses is, as Colin already mentioned earlier, we didn't have the best advertising. We didn't do the best in our marketing. It actually turned customers away to the ads that we put out. So that was a big minus for us and turned some customers away. Also, our production costs have now increased, as well as we don't have a big hold on the market right now. We have competitors that are level with us or even have a bigger share of the market. So now it's time for us to look at our opportunities to climb back and regain the market. So a few opportunities, as mentioned earlier, is research and development, new components, better our brands, to put new brands out there with these new components that we do with our research and development, so that we can improve it and put the best thing out there, as well as a new sales office, as mentioned earlier by Kendra, in Sao Paulo, where there were no competitors, there was no competition, so we can definitely open up there and take hold of the market there right away, right off the bat, be strong there, as well as analyzing our competition. What are they doing? How can we gain traction on them and even boost ourselves above them? So that are some opportunities that we have. And really, our competitors, we're doing research and development, so are they. They're trying to put the best thing out there as well. And as well as them having a higher share of the market, they are more popular at the moment. So we really have to claw back into this thing, make the right decisions, so that we can grow, not just in a few areas here, not just in the web sales offices or in Chicago, but everywhere. That is the goal. We want to keep improving, and I know with the team that we have, we will continue to do our best and improve. And here we have Kendra to finish things off.
Thank you, Daniel. And as always, thank you to all of the co-managers that are just very hard at work here at Alphamine Technology. I could not be more proud. And thank you to the Board of Directors for continuously supporting us. We are all so eager to share with you our decisions that we have for Q6, as we believe that they will be grand. Thank you, and we'll see you next time.